11th Standard Accountancy, Chapter 13, Illustration 16 from the trial balance of Ajit and the adjustment given below. Prepare trading and profit and loss account for the year ended 31st March 2016 and the balance sheet as on that date. What they asked? They asked us to prepare final accounts. Okay. Before that, we need to mark the given information. Okay. So, trading account goes to opening stock goes to trading account, furniture fixtures goes to asset, purchases is trading account, sales return trading account, carriage inward means trading account, office rent profit and loss account, sundry debtors goes to asset side, and bank balance means cash at bank. Okay, asset side. Bad debts goes to a loss goes to debit side of the profit and loss account, and capital is liability, return outward goes to trading account, bills payable liability, sales means trading account, provision for bad and doubtful debts and provision for discount on debtors both goes to profit and loss account. Okay, apart from that, they have given some adjustment will appear two places in the final account. So stock ended means closing stock goes to trading account and asset side. Okay, then further bad debts goes to profit and loss account and asset. Create provision for debtors, discount on sundry debtors both goes to profit and loss account and assets. Okay. Say let's go to prepare the final accounts. Okay, first we always started with the trading account. On debtors side, we always as usual started with the opening stock 15,000. Purchases we have the adjustment, so we have enter inner amount column. Purchases return outwards means purchases return, after subtracted we will get 39,000. Carriage inward and the sales return we subtracted, then closing stock. Okay, so all the information related to trading account we have entered here. Then we get the differences from both debit and credit side. We have the differences 66,000. So 66,000 is the gross profit. We have to transfer that gross profit into the profit and loss account credit side. We entered, always started with the gross profit for profit and loss account. Then office rent as usual we entered here. Then we have the calculation for the provisions. Okay, listen carefully. Here we have one bad debts and additional bad debts we have in the adjustment. Okay, so we have to add this both bad debts and the additional bad debts. Okay, so bad debts how much rupees? 900 rupees, and additional bad debts we have 100 rupees. Both we have to add it here. Listen, bad debts how much? 900 rupees we added here, and further bad debts means additional bad debts we added, we enter here. Then for that we have to add 2% for provision for bad and doubtful debts. How will you get it? Listen, before whenever they have given percentage in previous transaction we have the bad debts. We have to check whether we have the previous transaction we have the bad debts or not. Yes, here we have the bad debts. Okay, in previous transaction. So that bad debts 100 rupees we have to first subtract it from the sundry debtors. Sundry debtors we have 20,100 rupees. Okay, so from 20,100 rupees sundry debtors we have to subtract further bad debts means additional bad debts. Okay, how much rupees? 100 rupees we subtracted. We will get how much? 20,000 rupees. From the 20,000 rupees we have to find 2% of new provision. Okay, so with that we have cancel 2% means 2 by 100. This 20 is cancelled for this 20. We will get how much? 2 2s are 4, 400 rupees. So that 400 rupees is the new provision. Why we say new provision? Already we have the provision inside the box, so we called it as the old provision. Okay, so we have to subtract that old provision from sundry debtors. Okay, so inside the box we call it as the old provision, and adjustment we called it as the new provision. okay, 400 rupees. So that 400 rupees we have to enter here. Okay, we have to add the new provision 400 rupees enter here. So we have to add that 900 rupees and the additional bad debts 100 rupees and the new provision 400 rupees, we will get 1400 rupees. Okay, then similarly we have two discount on debtors. Discount on debtors, one for within the box we have provision for discount on debtors 100 rupees and adjustment we have 1% provision. That 1% provision on discount on debtors means this is a new provision, we have to add it. Okay, this is the old discount. Okay, so after we get new provision for 2%, we will get 400 rupees, right? Listen, 400 rupees from 20,000. We have to subtract it 400 rupees from 20,000 rupees. Okay, we will get 19,600. From that 19,600, we have to find 1% discount on sundry debtors. So 1% means what? 1 by 100. So this 20 is to be cancelled for this 20. 1 into 196 means 196. So that 196 is the discount on debtors. Okay, so that discount on debtors we have to, this is the loss. So listen, bad debts, provision for bad debts and discount on debtors, everything is the loss of the company. So we have to enter it on debit side of the profit and loss account. So 196 rupees we entered on debit side of the profit and loss account, and with that we have to subtract old discount on debtors. Within the box we have, this is called old discount. We have to subtract this one from new discount. Okay, 100 rupees we subtracted from the new discount. After subtracted we will get 96 rupees. Okay, so related to profit and loss account informations we have entered on profit and loss account both sides. Then we have the differences 42,004 rupees on debit side of the profit and loss account. So it is called net profit. Net profit, we got net profit 42,004 rupees. We have to transfer that net profit into the capital account. Okay, so let's goes to balance sheet. Always started with the liability side is easy for you. On liability side we always started with the capital. How much rupees? 25,000 rupees. We enter it on inner amount column because we have the calculation with it. Okay, see, so we got the net profit on profit and loss account. How much rupees? 42,004. We have to add with these two, we will get 67,004. Then bills payable we entered on liability side. Let's go to asset side. Furnitures and fixtures, stock in trade means closing stock, and cash at bank as usual we entered on asset side. Then we have a calculation on sundry debtors. So we have to enter sundry debtors on inner amount column, and we have further bad debts means additional bad debts 100 rupees. Okay, we have to subtract that 100 rupees on sundry debtors. We will get 20,000 rupees. With that we have to less 2% provision for bad and doubtful debts. We already find out 400 rupees. We have subtracted from that 20,000. We will get 19,600. With that we have to subtract provision for discount on debtors 1%. Means how much rupees? 196 rupees, right? So we have, after we subtracted 19,404 we got. Okay, so all the entries related to balance sheet, liability side and asset side we entered. Okay, then we have to find the total. According to the balance sheet, the total on both the side is always to be equal. So we got 77,004 we got on both side. Okay,